Okay, what's up, traders? What up, tycoons? Super excited for today's video. We are looking at XYO. This was a viewer request, so if you have any request for me to analyze and look at a ticker for you, let you know what levels I'm watching, make sure to comment down below. I do those viewer requests every single week. I try to do at least one or two of them. And we'll just jump straight into the video. Okay, we're going to learn about how to use the Fibonacci tool. That's going to be this over here. All right. And then we're also going to look at our MACD and our relative strength index. Okay. Using all three of these is really going to help you out and give you a better thesis in your trading, right? It's like going to battle, it's like going to war. You need to be properly prepared. You need to bring the right weapons and have as many weapons at your disposal to really give you that competitive advantage and give you an edge in the market. So what we're going to do is we're going to look at these three levels right here specifically, the 61.8, the 50%, and the 38.2. All right, you come over here, use that, and set it to these. These are the three most common retracement levels. Now, what does this mean? It means that when you come down, you're either going to retrace and continue the downtrend, okay, or you're going to come down, test the retracement levels, find support, right, and start a possible reversal, all right, where you would have, the trend right here is high, lower high, lower high. If we come over here to our breakout level and, we get a breakout, then that's when we can start a new trend of high and higher highs, right? And look to continue to start a new trend. Otherwise, this is simply going to be a breakdown with a healthy retracement that leads to a further push down. Now, I do think that there's some bullish potential here in the short term because of our relative strength index. Okay, so that's going to be down here. And what I'm seeing is something known as a bullish divergence, right? So we have a low here indicated by these circles and a lower low right here. We have a low and then a higher low on the relative strength index. That's known as bullish divergence. It's an indicator you may see some bullish activity in the future, because what's happening is the price of the token is getting cheaper, but the strength of the token at those prices is increasing, right? And what did we just go over? We just went over how this would be a healthy retracement for a continuation of the downtrend. So it wouldn't surprise me if we do come up a little bit to test at least 0.0051 for a possible, retracement rejection. Again, if we break through these levels, okay, that's when we can start the reversal. So what we'll do is we'll go ahead and go back to the past real quick, and I'll show you a couple examples of the retracement levels really just, doing what they do and working to, basically signify that we are still in a trend continuation, right? So what we've done over here is we've taken our swing high, okay, connected it down to our swing low. We see we come down, we get a healthy retracement. This is just a wick, okay? So wicks are a lot of times style classes being triggered, okay? So, you have a lot of people who perhaps were looking to get short at this level at the 61.8, and to draw liquidity, what they do is they stop people out. So, the wicks are very important, but it's very important to really pay attention to the bodies, right? So, because ultimately we did reject the 61.8, right? The candle opened up here, came all the way up, rejected, and then closed right here at our 50% retracement. So again, we come down, we have a healthy retracement, we continue the trend downwards, right? And then we do the same thing over here, right? We take our swing high to our swing low, and we see we come down, they have a healthy retracement, get rejected at the 50%, and then continue a downtrend, right? And we see that really that's just been the pattern here recently. And it's no surprise that we're just, getting retracements and continuations of downtrends, as this is a crypto winter. It's been a very brutal crypto winter. We can see again here, we're coming down, we're retracing right here to our 38.2% level, and then continuing the downtrend, right? And we do it again here. We take this high, connect it to this low. We see we come down, we retrace up here, and then we continue the downtrend, all right? So that's really what we're looking at, and that's some of the things that you want to pay attention to. Now if we go over here, here's a great example of a bullish divergence breaking through the retracement levels to start a possible reversal, right? And so what we're looking at again is we're looking at a low here and then a lower low right here. All right. So we have a low and then a higher low at this point. So the token is obviously in a downtrend, right? The price is going lower, but the strength of this token is clearly in an uptrend and increasing, right? And then what do? We actually take out our retracement levels, right? So we come down and then we come up here, we wick out above, and then ultimately we pull back and then make a higher high. Now, higher high in term of here to here, but overall it was a failed reversal because if we look, we weren't able to come up back to this level over here and create a high and then a higher high from there. So this is what's known as a failed reversal, but this is a great example of us, coming down, hitting our retracement levels, coming back, coming back down again. Sorry, I had a hiccup. Okay. And then, we ultimately break through the retracement levels, and that's when we try to start a reversal. Now, did that reversal happen? Unfortunately, no, but this is why it's very important to watch these levels. Okay. The next thing that we're going to look at actually is going to be our MACD. We'll start over here and really just look at the first sell signal and show you guys how much protection using the MACD can give you when looking at for sell signals. Okay, so right here is the moment when we get our sell signal. So a sell signal on the MACD is going to be the blue line crossing below the orange line, trading below it, right? Once you see that, that's an indicator that there may be some bearish activity up there in the future. Okay. And what do we see? Well, the token dropped over 50% and ultimately much, much lower than that, down 70, 80% plus. But that was the initial sell signal right there using the MACD. Now we can zoom in over here to some previous to some other times in the chart. Okay. And we'll take a look and we can see that we got another sell signal, right? So right over here, again, we're seeing the blue line cross below the orange line, right? So blue crosses below the orange line, it's trading below there, and we get another very sharp drop afterwards, right? So here's our sell signal right here on this day, and we end up dropping over 69%, basically 70% drop on that based off of our sell signal, right? And we can come over here and here recently, all right, not too long ago, we did get a sell signal. And it's a great example of combining signals together, actually. So what I want to do is highlight the bullish divergence first. And so that's going to be, again, the ovals here. So we're seeing, we're heading lower, okay? We're in a slight downtrend, okay, heading lower, but the relative strength index has a low and then a higher low, right? So, the relative strength has been increasing this whole time as the token has been chopping and moving lower, all right? And what we see is a big, massive push to the upside. Now, you can never predict how much of a move is going to come off of a bullish or a bearish divergence, but it gives you something to base your trade off of, right? Okay, well, now I have a thesis, I have a game plan heading into my trades. I'm looking for a bullish or a bearish divergence. We see we have a bullish divergence, and trading is done a lot by algos, which is why we like to use the fibs, because it's a mathematical formula that gives you price targets versus just drawing them with the naked eye, right? And then they're also programmed to buy and sell off of these divergences, off of these buy and sell signals, many different things. So when we talk about combining signals, so here's our buy signal, right? And then we get a very sharp move to the upside. Very shortly after that, okay, over 140% move right there, we get our sell signal. And ultimately, again, that's your signal to get out of the play. If you didn't take profits up here, you need to take profits down here because there's potentially much more downside. And we look at the measured move. Once we got our sell signal was right up here, okay, and we ended up dropping another 58%. So, the reason I'm showing you guys this is because it's very hard to navigate through the cryptocurrency atmosphere. A lot of people are, either inexperienced or very frustrated when it comes to trading because some things aren't going their ways. And these are just some tools and, really just some strategies that you can use to help better understand the price action, look for buy entries, look for sell entries. And now that we've reviewed all of that, we could see, okay, and have a much better understanding of what I broke down in the beginning. So we're coming down. We're most likely going to retrace up here. Why? Because we have a bullish divergence where we're heading lower and then the relative strength index is actually increasing. Okay, so the token's getting cheaper. The strength of the token is going up. We may see buyers step in, but we know if we don't break out through these three levels right here, it's just going to be a continuation to the downside. If we are able to come up, all right, and then hold right around these levels and then push higher, that's what we're going to be looking for. But we truly won't have a breakout until we're past our breakout level, because otherwise it's going to be another lower high like we looked at in the chart, right? We have a high here, lower high here, lower high here. if we come up here, all right, to this level and we just create an equal high, or we get rejected, and we're not even able to come up to our breakout level, then ultimately it's still going to be a bearish trend, and it's still going to be a trend of continuing to making lower highs. All right, so thank you for watching this video. None of this is financial advice. Again, just, trying to help some people out with some different strategies that you can use to give yourself possible entries and exits. If you enjoyed this video, smash the like button and subscribe to the channel, because I'll be dropping videos like this every single week, about 5 to 15 videos a week. And don't forget about the viewer requests. Okay, I do those every single week. I try to get at least 1 to 2 of them out, and that's basically it. Okay, just comment down below, what ticker you want me to analyze. Be happy to do it for you.